Fed expecting two more rate hikes for the year, what can we expect from the bond and stock market?
Okay, so this is important to understand. The Federal Reserve has come out with what they call their Statement of Economic Projection. They do that 4 times a year. They meet 10 times. So they were not going to meet in August, for example. They actually do meet, but it's not an official meeting. They have a get-together in Jackson Hole, Wyoming, right? But so they miss a couple of months. But those statements of economic projection, they put in there what they call the dot plot. And the dot plot is kind of a consensus amongst all the Fed governors for where they see interest rates going. And they were seeing in this last one that just came out this week, 2 more rate increases for this year, 1/4 point each. And so they did pause here. Now the market is currently, as we sit right now, expecting 1 more rate increase. That's a little bit different. Actually, the last show, we showed you what the market was expecting, and it was expecting 1 increase and then 1 decrease before the end of the year. Right now, it's just 1 increase. So the differential is pretty small. The Fed says, hey, 2.5 point altogether. The market is expecting 1/4 point increase for the year.
Yeah.
Personally, when I look at that, I don't think there's going to be enough of a differential there to really have a huge impact. Again, on the point in time that it happens. So let's say that there's a Fed meeting in September. They've raised rates in July, which is now up to, 70 some odd percent expectation that they will raise rates in July by a 1/4 point.
Yeah.
So let's say that happens. The market has been quite accurate as to where the Fed's going. So then the next rate increase, the first one they could do after that would be September. Let's say they do another one in September. The market's still expecting nothing. Then the market's going to have trouble during that period of time. But if you look historically at interest rate increases, the market does struggle like it did last year during those high increase periods of time, and really churns and has lots of volatility, which is, roller coaster aspect of what we had last year. So, this particular scenario, though, between 1/2 point and a 1/4 point, I don't think it's going to matter that much. Probably has more impact on the bond market, right? Just because the bond market is much more sensitive, but even then, I think the bond market's kind of already somewhat normalizing to the situation.
Yeah, as you go higher in interest rate too, every time you do an increase, it's kind of like a smaller percentage of an increase. So it's not as impactful once you get to those higher input. So like if you're at 1%, you increase a 1/4, that's a big increase versus at 5% increasing to 5.25.
That's a great point. I mean, it's almost negligible, really. I mean, right? I mean, we were at 0. And then we got to 1/2 point, and so we doubled when we went to 1%, and so those were big differences. And so going from 5, to 5 1/4, it's just about negligible. So, and we are seeing, a decrease in inflation across the board. Core inflation still needs some work. It's got to come down faster. It'd be great. There probably will be some, and this is just my thought this morning when I was thinking about this. I think we're going to see a jump back up in inflation at some point in time. That happened in the 70s. It's likely to happen here. And one of the reasons is, my thought here is that, the stock market is really going nuts. And when the stock market goes up that much, it creates this kind of loosening of financial conditions. It's not tightening. Now, there's tightening going on when they raise rates. There's tightening going on when the regional banks are no longer lending as much money because of their issues. So there's tightening that's happening. But if people are starting to spend more because they own Nvidia stock or something, that's gone bananas, then exactly. Well, you just feel more confident. It's even if you don't have the money, sometimes you might spend it if you feel more confident than when you feel really worried about the future. So, I think there'll probably be some issues that we're going to have to deal with here. It's why inflation is such a big deal. It's really hard to wind it out of the system.
It takes time. A while. It's not a fast process.
No. So it took years to kind of build it up. It'll take years to get rid of it.